What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY and break down some very important things coming out for the week, and also talk about why we got a pump in the very beginning of the day, which actually ended up getting destroyed by a very big piece of news. But despite that, we actually bounced and we saw SPY close only down like 0.2%, nothing too significant. Tesla also closed pretty flat. So I want to break down what happened today in the markets and also what's going to likely happen for next week with earnings coming out. Now, before I break anything down about this, though, before I get into any more details, I do have to mention a couple of things. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in just 3 days. Check it out before they run out. With that out of the way, let's get on with the video. So SPY was actually down about 0.24%. What actually happened in the beginning? Well, to start us off, for the first like 25 minutes, SPY was just ripping to the moon. This thing actually pumped very hard to about $415 a share. The QQQ reached my target of like 320. SPY came very close. However, the reason why this happened was not what a lot of people were actually thinking. What happened was the bank earnings came out and they were actually a lot better than expected. Much better than expected. We were expecting the banks to just collapse. And I mentioned this yesterday. I thought the bank earnings would be a lot better than expected. BlackRock beat on earnings. Citi ended up beating. JP Morgan beat. PNC beat. Wells Fargo ended up beating. They all beat on earnings for today. This was very bullish news. This did actually concern some people because of the fact that this could actually lead to tighter credit conditions. But besides that, this was very awesome to see as many banks did better than expected. Now, how did the market respond? We saw a lot of shorting that was going on. The market did close well above max pain though, and there was a lot of shorting. But despite that, the market makers were pumping us. SPY was ripping up in the beginning, so was the QQQ. We were ripping to the moon, getting ready to just keep going. The market makers wanted to do that, but then another piece of news came out. And this was also very interesting. The timing of this was very interesting. As the market was going to just continue going, the news came out, and the market ended up just reversing very hard. What was the news? Well, Michigan has come out with this survey. This was actually from the Consumer Sentiment, and the survey said that the 1-year inflation expectations are now up to about 4.6% from 3.6% in March. So now they're telling us that from here on out, inflation is likely going to get hotter, and the market did not like this. Once again, not very good overall. This is actually incentivizing the Fed to continue to raise rates. Many people could argue that Jerome Powell's moves may have to end up resembling those of Paul Volcker. And if that's the case, not going to be good for the markets. It's going to be a giant rug pull. Now, if inflation is hot during the April report, which is coming out in about a month, and also for like the May reports and the June reports, that's going to be very horrible for the stock market. And we have to be ready for this. And this is part of why the market ended up just selling off. This news was used as an excuse for the shorts to try to exit some of their positions at better prices. They're trying to bring the market down, but they actually failed to crash the market because overall, right, what happened was SPY just touched 410 and we got a really nice bounce off of it. We retested this support around this like 411 area and we just pushed near the end of the day. We were only down 0.4%. That's not even that horrible. I was hoping that we would actually see more bullish price action. I was correct about the banks and how the market would pump a bit, but then I ended up being wrong because of an unexpected piece of news that came out. We didn't actually see that coming, and sometimes unexpected things could happen, and that this did lead to some manipulation. However, the market, for the most part, ended up holding up by the end of the day, and we're only down 0.4% once again. So basically a flat day overall. There's a lot of volatility back and forth, but the close was pretty flat compared to open. But the question now comes as what's going to happen in the future? What is going to happen for next week? And this is actually very difficult to predict because we have a lot of earnings coming out. We have Charles Schwab, we have Netflix, Bank of America, Goldman Sachs, United, Johnson Johnson, Tesla, IBM, right? Lots of big earnings, Discover, Nokia, and the list goes on. Not to mention P&G and American Express, AT&T, lots and lots of big earnings for next week, particularly during the first 3 days of next week. And this is going to affect how the market moves, especially Charles Schwab, which is coming out on Monday. We'll see how this goes. We're hoping that they actually beat, but if they miss, then it is what it is. But anyways, earnings alone are going to move the markets, yes, but it's also going to depend on the options chain. For SPY, we have something crazy. Next Friday, we have 3.3 million puts expiring. Who knows what this is going to lead to? But I do want to note that Max Payne is currently only at 401, and the shorts are not going to like this. The shorts are going to try to fight and get more of these puts out of the money to in the money because there are almost no puts in the money for the 21st. They're going to try to fight. So expect a fight next week. I'm not saying who's going to win or what's exactly going to happen, but also know that the market is becoming riskier. Earnings are going to be very, very hard to predict. Just because some of the banks beat during the first reports today, it does not mean all of them will. And I also want to note that when you look at SPY, there is still a bearish divergence developing. I'm saying it's developing. I'm not saying we have to crash immediately. I'm saying that this is developing right now, and it's eventually going to lead to a big reversal, a significant reversal. I'm not saying yet. Maybe it's going to happen now. I just don't truly know, but it's going to depend once again on earnings. Now, let me explain this. So, when you look at the price, SPY has been on technically an uptrend. We made a higher high. We actually closed at a higher high compared to the highs right here in the 411s. So, SPY is making these higher highs. Right, it's going up. MACD is going down. Look at the MACD in the signal line. Look at the RSI right here. It's going down. What does this mean? This means that we're developing a bearish reversal soon. This does not mean we just crash immediately. It could mean that, or we could pump a little bit more. And if this divergence remains, if we keep pumping and pumping and pumping, the divergence will remain. And then we could see the market reverse. It's got to be one of those two, most likely. Now, the two possibilities are this head and shoulders could play out, right? The left shoulder, the head, and then the right shoulder that has been developing right here specifically. This could end up playing out. Or what could happen is we have like 3 drives up and then we come down. So this could be like the first drive. This could be the second drive. I don't know if we're going to break 416 or not. We came close. We hit 415 just today. And then overall, we barely held. We do technically have an indecision candle for today, which typically marks reversals and some more downwards pressure that could end up coming and a lot of gap fills. If earnings are pretty bad next week, the market could slow down. So you have to be careful. Now, what do I think is going to happen? My answer to that is we have to look at a lot of these other developments. We did invalidate the bearish divergence on this time frame. We did technically invalidate it on the smaller time frames. Right here, however, it's actually not existent on the daily chart. On the 4 hour, the 1 hour, and the 2 hour, it still is prevalent, right? We're still downtrending on the RSI and the MACD. The price is still trending up. So signals are a little mixed, but I do believe they're still valid. And this is also going to depend on the dollar. The dollar is trying to break out. It wants to break out. If the dollar gets a breakout on the daily, right, it looks like this so far. We had one big drop to about 100.79. Then today we opened and we pushed up. If the dollar keeps uptrending, or if it gets a retest of the 50 EMA around 103, it's going to be bearish for the stock market. We'll see what the dollar does. And then finally, for the VIX, right here, the VIX is crazy undervalued. We're at one of the lowest levels the VIX has been at since almost 2021. That's insane. Only one time we kind of touched this level around February of this year. but the VIX is very, very undervalued. The last time it was this low besides February of this year was closer to the very beginning of 2022, if not during like 2021. We're near 2021 levels on the VIX. That's pretty significant. The VIX is due for a bounce soon, right? Also notice that on the VIX, on the weekly chart, we also have a bullish divergence. Price is going lower, it's downtrending, as you can see right here, right? But the RSI is actually respecting a slight uptrend. Why? Because the RSI was at 38 right here. Now the RSI is at 41. On the daily, it becomes more clear. The VIX is also developing. Hold on, right here, the VIX also has this potential. It had a divergence right there. It's not actually developing on the daily as much as it was on the weekly, but we could try to zoom out and see something similar. So far, we'll just have to wait and see how this develops. It's still kind of flat, so I'm not seeing the divergence as well on the daily. On the 1 hour time frame, however, I believe the VIX is still very oversold, and we do have a tendency of seeing it bounce when it's at these lows. What I'm thinking the VIX is telling us is it either has more room to drop and then it bounces, or it just bounces from here, which means the stock market is going to cause that most likely, because SPY is most likely either going to continue to push and maintain this divergence, and then it ends up establishing a top somewhere around here. I just don't know where it's going to be. It depends on earnings, whether it's like 416, 418, 420, and then this thing collapses, or it just collapses from here, because we do technically have a reversal doji on the daily. That is technically what's developing. It's got to be one of those two. In order for me to answer this, I have to see earnings, and I don't truly know what earnings are going to bring. But the odds are favoring a reversal very soon. Very, very soon. This thing is going to reverse, in my opinion. Nvda managed to close kind of green, as I did predict. It's very interesting. But I want to note that Nvda is getting weaker by the days. If you look at this on the daily chart, clear head and shoulders developing. On the 1 hour time frame, the same thing is still developing. This, in my opinion, is starting to look weak. It's not even around like 270 now. It's just getting weaker and weaker. I believe Nvda is most likely going to just continue to downtrend. On the 1 hour time frame, we actually have a possible, let me just double check it. We actually have a bearish divergence that developed here. So the price right here went lower, RSI went higher. Another divergence is developing. Nvda looks weak, overextended. It's due for some downside. Could it pop depending on earnings? Yes. But for the most part, going into the future, I believe it's going to eventually start sinking. I think there's more downside to come. So far, the head and shoulders is valid, and we did break below 264 temporarily before bouncing back. I think if we do break below this 264 level, it's going to continue to downtrend, and that's going to mark this thing continuing to drop. All right, so thank you all for listening. Have a great day. Market to the moon, and peace out.